Hi, everyone. I plan to discuss Chapter 8, walking through the book a bit, but ultimately turning to the continuous problem, which is really the essence of Chapter 8. So in Chapter 8, this is when all of your fund work that you've been working on will come together in one set of government-wide financial statements. These financial statements are always prepared on the accrual basis. So I think the biggest challenge in this chapter is going to be converting the funds that are not prepared using accrual-based accounting, the ones that use the modified-based accrual, to get those adjusted into the actual accrual. So with that, actually, with the go back here. These statements, these government-wide financial statements, a couple of big things to remember is that these statements include the governmental funds that are all of those modified accrual accounts. They will also include the proprietary funds. So within the proprietary funds, there's the internal service fund, and then also the business type activities that we'll see. Those are based on accrual basis already. So the internal service fund, we'll see that actually gets rolled into the governmental statements. So you see those as part of the government-wide financial statements, and then you'll see in our statement of position a separate business activity post. So those proprietary funds kind of separate a little bit, but still based on accrual and still fully reported. As we discussed in Chapter 7, the fiduciary funds are not reflected on the government-wide financial statement. So everything that you had done in Chapter 7 does not end up rolling into these financial statements. The two big funds that roll in are the governmental funds and then the proprietary funds. So how do we do that? That's the big challenge of how do we make this into a nice, neat package. We are going to use a conversion workbook. So this is how it will be set up. And we'll see this in the Excel file in just a moment, where you start with the fund basis. So what we're trying to do is convert from modified to accrual basis. The funds are set up for these governmental funds that are set up using the modified accrual. We put the balances in there that you've already calculated for the governmental funds. So you already have that information. But now there's going to be a list of entries that we actually have to book in order to get those governmental funds adjusted for the government-wide financial statements based on the accrual basis. So again, how do we do that? Looking at this conversion. So conversion from fund financial records to government-wide financial statements. So these fund financial records, again, are the governmental funds that are based on the modified accrual basis. So instead of, I'm going to kind of flip back and forth, but the big thing to remember is that under the modified accrual, they do not record expenses, right? Because everything went into the expenditures account. They don't record long-term liabilities because everything in these statements is considered current. And then there are some timing differences for revenue and expenses that need to be adjusted for in order to meet the accrual basis of accounting. Remember, for revenue recognition, when taxes are due and they estimate that they won't be collected for 60 days, they actually show up in revenue for the next year. They wouldn't show up on the current year, even though those taxes were due in that current year, as an example of revenue and how we might need to convert for expenses. Things like different accruals, like salary accruals that might have had vacation time associated with them. So overall, just absences that have a longer term associated to them wouldn't be expensed in the current year's financials. They would be expensed in the next year's financials under the modified accrual. But in order to adjust to accrual, we would actually need to book that expense. So those are some examples, and we'll walk through some of the entries that are necessary for your continuous problem. So let's look at the problem itself. So I'm just pulling up the actual problem. Do you see my screen? Okay. So for this problem, starting at the top up here, so we're in the Chapter 8 continuous problem. Here we go, government-wide financial statements. So it says to assemble the following from previous continuous problems. So you need your governmental fund balance sheet and statement of revenues, expenditures, and changes in funds. And this was done in 5C. So you did that for Chapter 5. So last week, those total amounts, which you have those totals. So even if you don't have, your final updated problem, the totals that were on the spreadsheet were the totals for the total governmental funds. Remember, you have to kind of check your balances there. So you also need the proprietary funds, the statement of net position, and the statement of revenue and expenditures. So remember, the proprietary funds are the internal service funds and the enterprise funds. So you need that information based on what you've already completed. And that was from Chapter 6. Then we have to start the worksheet, which I've done for you and given you the Excel template. So using the trial balance format illustrated in the text. So the text shows you on page, let's get there. Might help if I'm in the right chapter. I was in proprietary funds. So in Chapter 8, if you look on page starting on page 230, you'll see an Excel spreadsheet similar to the one that I've given you in our module. And let me pull that up so that we can walk through the requirements. Okay, so here is...
You've been reading for some time now, but you haven't stopped to practice. Regularly practice.
Shut off the book. So in this Excel sheet, need to find it. Yeah, we start with the conversion workbook. Okay, so this is what you have, and I've already filled it in for you. But these amounts, these governmental funds, came right from your Chapter 5 governmental financial statements that you prepared, right? So all of the funds are here. And notice how this conversion worksheet is set up. The debits come first, right? So any account that has a debit balance, so all of the assets, right? You debit the asset to increase the asset. And then all of the expenses, which are debits. We have a total debit. And then all of the credit accounts, so all of the liabilities, some other advances deferred, all in the liabilities, accumulated depreciation has a debit balance. All of the revenues have, accumulated depreciation has a credit balance. All the revenues have credit balances and some proceeds. So what you should notice here is that total credits equal total debits. So that's going to be a big piece when you're filling this out, to make sure that when you move from the journal entries that you're going to post here, right, the adjustments and eliminations, to get these governmental funds, which these numbers here in the financial statements that you prepared in chapter 5 are based on modified accrual. We need to book these adjustments and eliminations to come up with the governmental funds that have been adjusted to accrual basis of accounting. So what we're going to do is work through how to do that. And your book does a very good job of walking you through this. So when you look on page when you look on page 216 of your book, pull the book back up. It's going to walk you through the journal entries that you need to make in order to convert the governmental funds from modified accrual basis to accrual basis. So the first step, and what we see here, this is the list that you want to make for the entries. You have to first look at the capital assets, so those fixed assets. So you're going to record these capital assets. Remember, they were originally included as expenditures. So you're going to remove that and actually record the capital asset itself. And then you have to book depreciation and then convert the sale of the asset to the accrual basis. So for these capital assets right here, you can see the journal entries that you're going to need. So the first entry is to record the actual capital asset and the related accumulated depreciation for the year. So for this problem, if you go back to what is actually given of what you need for the problems, if you look on page 14 of your assignment, it's telling you that you need to record the fixed assets relating and the related accumulated depreciation accounts. So you're going to have a lot of files going back and forth, but you really do need the book, the Excel file, and the Word file that walks you through the case itself. So here's the, here's what's being asked. And here I am now going to prepare the journal entries. So again, this first entry, record the January 1st balance of the fixed assets and related accumulated depreciation account. This entry goes along with entry number 1 for the capital asset related projects. They give you the cost, they give you the accumulated depreciation. So you are going to book that capital asset a debit to capital assets, instead of breaking it out like your book does between land, building, improvements, it tells you up here for capital assets, it's not necessary to set up separate lines for different classes of capital assets. Simply do one row for capital assets and another for accumulated depreciation. So the way your book is doing it is breaking it out into all of the classifications. We're just going to lump everything into capital assets and then accumulated depreciation. So if we know that the capital assets need to be a debit to capital assets and then a credit to the accumulated depreciation to actually get that on the books, the offset, and this is what's different than the traditional way that you'd book a fixed asset entry, the offset to balance will be a credit to the net position. So it will end up being a credit to the net position, which is actually an increase in the fund balance. Okay, so the next entry is the elimination of the capital expenditures shown in the government fund financial statements as revenue expenditures and changes in fund balance. To remember, you had originally set up a expenditure for this capital outlay. So they are going to have you eliminate that expenditure. And in order to do that, you're going to have to credit the expenditure because you want to get it off the books. So if you actually looked at a T account for this account, you'd see a debit balance sitting there for capital expenditure. It's like an expense, right? It's like you're booking a capital expense, but for this purpose of elimination, you have to credit it to get it off the books. So if you went back to your original entries that you had made for these capital assets, you would see that there was a capital expenditure for, let me just pull up the file. So this would be Chapter 5. Let's see if I can find it here. It would have been best if they could have just given it to you. 5.8. So you do have to kind of have a good understanding of, the flow of these statements, but it's coming from I'm going to pull up Chapter 5's financials. So here's the completed Chapter 5. And if you look, I know it's an expenditure, right? This is the entire governmental funds, right? So in Chapter 4, you did the general and the special purpose fund. And then in Chapter 5, you did the debt entries and the special purpose fund. And for capital outlay is what I'm looking for, of what the total expenditure was. So I know in capital I had $492,800 for the general fund, and then I had another 5.3 for the jail. So I know that for the governmental funds, I had a capital outlay of 5.8. Notice it flows through expenditures when, if you look on your balance sheet, you don't see those assets sitting in the balance sheet under governmental funds as fixed assets because they're not considered current, right? These financial statements under modified accrual are considered current, where these capital assets are long-term. Their intention is to use them for greater than a year. So any long-term assets are not residing on the balance sheet. Instead, the expenditure is reflected in what was paid for that asset. Okay, so what we're doing is taking it out of this capital outlay with a credit and putting that amount into a debit for capital assets from what was previously booked. Okay. And then the last piece to book the capital for the conversion. Let me go back to our Word file. So here's our Word file. The last piece, they give us depreciation expense. So under modified accrual, they're not booking depreciation expense because everything that was expense for the year was in that expenditure. Well, we need to book the depreciation for the amount. We don't know, what the depreciation method is. We don't, really know any of that for the purpose of detail, but they give us the number. 4.9 is what we have to book for depreciation. So our debit to depreciation expense and our credit to accumulated depreciation. So that's how you book the first piece of this adjustment for governmental funds going from modified to accrual basis. And the worksheet is where you're going to record all of your journal entries. So on that worksheet that I've given to you, flip to that, you've got to record your entries and then update the file to reflect the entries. So you can almost think of it like an adjusted trial balance where you're starting with these entries, you're booking your entries for adjustment purposes, and then you come up with your new governmental fund. So all those entries you're going to book here, but then you're going to reflect where they affect the accounts here. After each grouping, I would double check that your total debits equal your total credits. So for every debit, you have to have a credit. And debits need to equal credits. So they have to balance. I would also link them between accounts. So let's just say, the first entry that you're doing, you had 1,000 and 1,000. And this is the debit to 1,000. And this is the credit to 1,000. I'm just using this as an example. These are not the right numbers. I would have those linked so that, let's say this number should have actually been 2,000. You can just update it here and it's going to link it right to your adjusting process. Okay. So the next group of entries are for the conversion of debt. Now remember, because these financial statements are based on current information, any long-term debt is not included on the governmental fund financials. I'm just pulling the book back up. So for the book, the next group that we have to think about is the long-term related entries. So these entries, again, are the entries that are long-term debt that had previously not been recorded under the general fund activity because only the current debt had been previously recorded. So the good news is for our journal entries in your Word file, they're going to give us all the information that we need to actually book our journal entries. But if you're going to have to use the book to come up with these journal entries. So for instance, the first one is actually, again, putting these bonds, in this example, on the books that weren't on the books before. So this bond was a 10-year serial bond. There were principal amounts. It was purchased at a premium. So you have to go through and book the entry for this long-term portion. So in our file, let's just go to our Word file. That gives us the information that we need to know. Let's see. Here's our Word file. And now we're on, so we booked all of this, right? We booked the depreciation, now we're on D. So these are the debt entries that we're talking about. So it says eliminate the other financing sources from the sale of bonds by recording a liability for bonds payable and the related premium. Okay, so how do we know what that is going to be? We're going to take a look at our, oops. I'm just trying to find the file that has the original bond information. So I think it's be nice if they had just given us all the information right here versus needing to flip back and forth, but it certainly shows your understanding of kind of the back and forth. So again, eliminate the other financing sources from the sale of bonds. So the other financing sources that we have, I think we're going to have to go back up to the original amount. Let's see. I need to find the where the sale of the bond actually occurred. I think it's buried in here. Hold on, I can't remember where I found it before. So trying to see where the sale of the bond shows our numbers. All right. Oh, here it's probably in the debt. Let's see. So this was some of our debt original entries to the fund. So now we're truing up what it should be under accrual basis for long-term debt. So remember, we have the existing debt on the city hall. Then we have the new debt as part of the fund transfer. Still don't see. Where that additional amount came from. Yeah, I don't know. What we're doing here is, if you look on page 221 that we were looking at in the book, all we're trying to do is like in the original example, for the Village of Riverside, the 10-year serial bond with a principal of 1.2 were sold. And then it gives you the annual interest. I'm just looking for that information. I can't remember where they have it. Might have to come back to that one. We do have to know about that sale. Probably right in front of me, and maybe somebody watching this is like, it's right there. So, I mean, for this one, I just think that might be a little out of order, the information we're given. But what we need to do is follow the journal entry on page 221. So just to set it up, what we're going to do is to show that there were proceeds from the bond. So however we got the money from the bond, you can just put proceeds. And then you are going to book a credit for the bond payable because it will end up being returned. And then if there's any premium or discount, and we know here that there's a premium, so the premium we're going to credit as premium on bonds, and then the debit just goes to, just as your book says, other financing sources, premium on bonds. The issue is we just don't know how much they actually finance this bond for. Let me just look one more time. I apologize that I just don't have it right in front of me. Let me just search the so that's the bond, the $4 million bond. Oh, here it is. Right where I was trying to look, I was thinking it was in this part. So the voters approved the $4 million bond. So sorry, it was right here, just as I was originally looking in chapter 5. So for this capital project, it was a municipal type bond that was raised. So they did raise the money for the bond, and then it tells us that on January 1st, the total face amount of the bond, you know, what it was, and that it sold at a premium of $200,000. So if you go back to chapter 5, like I had pulled up, and you look at the debt entries. Here, right? These are the entries. The capital project fund entries. Here are the capital project fund entries. What you see here is how they originally booked it. They booked everything to, oh shoot, I'm sorry, you were not seeing my screen. So I just went back to chapter 5 that you had been working on, and you can see the capital project fund. This is where they raised the $4 million for financing. They sold it at a premium, so they sold it for $4.2 million. And what this is, it's a bond. They raised money. People bought the bond from the city in order to finance the city jail. And they, under modified accrual, book the cash, which is fine. That's the proceeds. But then they put it to other financing sources, right? Proceeds of bonds and premium on bonds. They didn't book the credit to the liability like we're used to seeing, because we do not book long-term liabilities. So what we have to do is reverse these entries. For the financing source. So I just want to show you under you see here that it doesn't show up on the financials, right? So when we book the journal entry that it's asking for, we're going to put the $4 million as a credit into bonds payable, and then the credit into the premium on bonds as you normally would. And then the debit, two debits, one goes to the other financing for the premium on bonds. This was in this journal entry here, the 200. But then here, we're going to put it right to the other financing proceeds of bonds. So these two just reverse into a debit. The credit becomes the actual bond payable and premium. The cash has already been booked properly. So that's all we're going to do for that piece of the journal entry. I apologize again for not being able to find this piece from chapter 5, how much the bond was actually for. But now we have it, and we can proceed. So we have, I'll go back to chapter 8 now. And we follow along, right? We eliminated that finance source. Now, as of January 1st, the city of Monroe had $12 million in general obligation bonds outstanding. So if these bonds were outstanding, we have to get those bonds on the books, right? But because the bonds, like in the previous problem, weren't new to that year, you just are going to book the debit to the net position, because these bonds had already been reported as other financing sources, in the previous year. So you're just going to adjust it to the actual net position for this account. So your book doesn't actually show that as a problem, but that would be how you go about booking the $12 million. And then when you look at the elimination of the expenditures for bond principal, the bond principal is the expense that had been originally associated with the debt service. So it's telling us, again, to eliminate the expenditure for bond principal. So when it was first set up, the bond that we were just referring to, it actually, let me show you. So if we go back to the chapter 5, and what I'll end up doing is giving you completed files of these. I'll end up attaching it to your submissions for the homework for the continuous problem. So for 5 and 6, chapters 5 and 6, I'm making my way through those. But I know that you need that information in order to actually book everything. So for this problem, again, you're trying to find out what that expenditure was for the debt service on the bond principal. And if you look on the statement of revenue and expenditures for the Chapter 5 governmental funds, you're going to see that there was an $800,000 expenditure for the City Hall debt service. And it was for $800,000. So I'm not going to, let me see what workbook I'm on. I'm still in our Word file, right? I'm not going to flip to the Excel file. You can find it right in the statement of revenue and expenditures for Chapter 5 governmental funds. And what you'll see is it's an expenditure for principal for the City Hall debt service, and for the journal entry it actually is made up of two different entries. So it was your entry number 1 and 3. You'll see two $400,000 debits to bond principal. So in this problem, we're crediting the expenditure for debt service for bond principal, because remember, the current piece of the debt was expensed. That's what they're doing. They're expensing the current piece, but it should be on for bond payable. So the current piece is the piece that will be paid within the year, but it actually hasn't been paid yet. So it really does belong in bond payable for accrual purposes. So you debit that amount, and that entry is similar to entry number 6 on page 221, where you're putting the bond payable back on the book and expending the principal. So you're just crediting that when originally, when you did Chapter 5, you were debiting it. And then we have to record the interest expense for this. So I'll have you just do the calculation, and it actually gives it to you for 328. And all you're doing here is the same entry that you see at the bottom of page 221, where you're debiting interest expense and crediting the interest payable for that amount. And then what you have to do, it tells you here, adjust for the interest accrual in the prior year's government-wide financial statements, but that was actually recorded as an expense in 2017. So when you have to book something to the prior year, it actually will be posted to the net position versus, let's say in corporate accounting, it would be retained earnings. So we're actually going to take it out of the interest expense, because some of that 328 was for the previous year that doesn't belong as the expenditure. So we're going to adjust it through the net position. So, and you can read about that right at the top of page 222, where we're debiting the net position and crediting the interest expense. And it's to get that interest in the previous year is what the debit to the net position does, and reducing the interest expense for the current year. And then we get into I, the amortization of the bond. This is just, we will actually be doing some bond accounting in the advanced financial reporting course, but these bonds are carried at amortized cost. So the premium needs to be reduced throughout the course of the amortization of this bond. So in order to do that, we're going to actually credit the interest expense, because the premium is the debit that we want to reverse from the original entry that we made in Chapter 5. So that $10,000 entry from Chapter 5 for the original amortization, we're going to, just trying to find it here. we're going to reduce the premium, right? Because when you originally booked the premium, like you did, where is it? Like you did in your entry D, that credit to the premiums on bonds for $200,000, by debiting the premium on bonds that were sold, you're reducing the premium, right? So you originally booked it as a credit. This $10,000 is the debit. The calculation is pretty complex because it is based on the amortization method, which I'm not going to go over. They give you what the amortization premium is, and then again booking the credit to interest expense to record that amortization expense, which is an offset to the depreciation expense, because it's technically a premium that is really more like a revenue, because the idea is when you sell a bond at a premium, the amount can't be immediately recognized into revenue, that premium. So that $200,000 in our case, instead it's amortized over the life of the bond. So by booking the credit to interest expense, it's effectively increasing the fund balance, right? It could be a credit to interest revenue or premium. But you see the entry number 7, and that's exactly what is going on page 222. So that is it for the adjusting entries that you need to make as they relate to debt. But then we have some other entries that we need to think about. So I'm going to pull back open the book for a minute. So in the book, you see, we just went over the long-term debt to get long-term debt in the book. But now there are all these kind of random things. So adjust to convert revenue based on the accrual basis. And then there's also going to be adjustments to convert the expenses. So if we start with, and you can follow along in the book, these are all the different scenarios that you may have to convert. If we go back to what they're telling us that needs to be converted in our Word file, then we have left off at J, right? So now we're trying to adjust our revenues, and they want to make adjustments for additional revenue accruals. The only adjustment is for property tax to eliminate the current year deferral of property tax. So remember how the deferral worked. This is tax that should have been recorded as revenue, but because they anticipate that they're not going to collect the revenue until 6 months, 60 days after the year end, they have to, they put it into a deferred inflow account. Well, and you can go back and look at what that deferred inflow account was for in chapter 5 that you booked. But it was a credit because it's almost like a holding account for revenue. So it was a credit. So we're going to debit that deferred inflow for property tax to get it out of that original modified accrual account and put it as a credit into the revenue account. So you can see that on 8A, that entry in page 223. And then so what else do they say? They say, and again, you're going to have to find that amount. I'm going to have you go back to chapter 5 and find what the deferral of property tax was for the governmental funds. And then in K, you're adjusting for the $21,000 of property tax that was deferred now in 2016 and recognized as revenue in 2017. So now, remember, we're looking at 2017. There were amounts from 2016 that, because of the modified accrual, were reported in 2017 but shouldn't have been, right, under accrual basis, because it really was $21,000 of property tax that belonged in 2016, but because of the modified accrual that they didn't actually get the funds until 60 days later, it went into 2017. So we want to take it out of revenue and reduce our net position with a credit. So you see that entry in 8B. And then in L, they have, now we're going to look at the expenses to actually adjust for any of these expenses. So they say, assume the company adopted a policy in 2017 of allowing employees to accumulate compensated absences, make an adjusting accrual for 42,000. So for this one, they're making it like it's a new policy that we have to accrue for. So this is just very similar to how you would accrue for any compensated absences, with a debit to the compensation absence expense, and then a credit to the payable. Sometimes you could see vacation payable. They're actually calling it a compensation absence payable. So that's a simple just adjustment that needs to be made. But then we get a little bit more confusing with M, because now we get into these internal service fund accounts. So everything that you've done up through L affected the governmental fund balances. So you're recording those debits and credits on your spreadsheet just to the governmental funds. But now when we get to M, it's telling us bring in the balances of the internal service fund balances from the balance sheet. Again, use a single account for all capital assets and a second account for all accumulated depreciation accounts. So now you have to go to chapter 5 when you did, you did the internal service for the proprietary funds. So you're going to have to look at chapter 6 for the proprietary funds for the internal service fund. And all you're doing is adding everything into the big Excel file. Right, let me pull up the Excel file. So now you're really just organizing your information. So these are all the journal entries go here that we just talked about. And everything up until now, you're putting the debits and credits where they belong in this adjustment column. This will end up equaling your adjustment. So when you're done, you'll have the accrual basis. And then these internal service funds are coming right from your internal service funds balance sheet. But to actually get them on to this statement, you actually have to record the journal entries themselves. So you have to go through and look to see what is actually sitting in that fund. So if we look at the proprietary funds for chapter 6, let me just pull this up so you can see where the numbers are coming from. So you have the chapter 6 proprietary funds, and these are the internal service funds. So these were the entries that you made. Water and sewer is the business enterprise fund. That is not, so this store and service fund, this is your internal service fund, but this water and sewer fund, this is your enterprise fund. So the only thing you're adding to the spreadsheet right now is the internal service fund. So if we look at the statement of net position here, and here are the internal service funds, we actually have to get all of these amounts onto now the government-wide financial statements for internal service funds, and you actually have to post a journal entry to do that. So if you look at page 227, entry number 11, there's the type of journal entry that you're going to have to post in order to get these numbers onto that spreadsheet. So you're going to post that entry number 11 that you see on page 227 using these internal service fund accounts. And that is how you're going to get the internal service fund now onto these government-wide financial statements. So we're almost done. We have a little bit more to go. Let's look at our Word file again with the information that we need to book the entries. So this was M, get everything on there. Now for N, they're saying no revenues from internal service funds were with external parties. So you're going to assume that 3,200 of the 11,200 we see from due from other funds. So this is sitting on their balance sheet, and the internal funds account represents a receivable from the general funds, and the remaining 8,000 is due from the enterprise funds. So they want you to eliminate the 3,200 of this interfund receivable. So all you're going to do is credit the due from other funds because it's currently sitting as a debit balance on that internal service fund balance sheet. So you're going to credit that to get it out of there. So that's due from, and you're going to debit due to other funds to put it, because it says it represents a receivable. It says eliminate the $3,200 receivable. So then if you debit the due from other funds and credit the due to other funds, it will eliminate that journal entry. And then what else? So for O, it says reduce governmental fund expenses by the net operating profit of internal service funds. As the amount is small, reduce general government expenses for the entire amount. So they have you actually crediting what they're telling you right here, this general government account. So you actually credit the expenditures current general government account, and then it ends up just they say into the debit of the net position. So it's just reducing the net position there by this expense, but you're going to have to find what it is, this reduction of the governmental funds expense. It's the profit from the internal service funds. So that was back from chapter 5. And oh, I'm sorry, not chapter 5. This is from chapter 6, the proprietary funds. So if you look on the statement of revenue and expenses for the internal service funds, you'll see an operating income amount on that statement. I'm not going to tell you what it is. You're going to have to find it on the government entities, government activities, internal service funds. There's an operating income, and that's what they are asking you to offset and reduce the expenses. So again, you're, instead of booking it as revenue, they want you just to offset the expenditure for the general government. So, right, an expenditure which we generally are doing away with, but we're going to reduce it with the credit. And then the offset is just a net position. And then they want you to eliminate transfers that are between departments within the governmental activities. So any of those transfer in, transfer out accounts, you need to get rid of. So you're looking through the accounts here. And what you should see, and I'm not going to flip to the Excel sheet, but in Chapter 5 on the Statement of Revenue and Expenditures, you're going to see a transfer in, transfer out. And the transfer in is 1.8. Oops, I wasn't going to tell you. It's a $1.8 million number. I'm not going to tell you the rest. So it's just having you debit the transfer in, credit the transfer out to eliminate the entry. And those are all the journal entries. So sorry, what I should add is you see it in Chapter 5 for the governmental funds, but then in the proprietary funds, let's see. Let's see if I can find it. So sorry, see, so they're doing the transfer in. I think I'm just, I think it tells you in 5 what it's actually for. I think that's the piece that we're missing. So if you went back to the Word document in Chapter 5, so you should see the transfer in and out on the Statement of Revenue and Expenditures, but if you went back up to Chapter 5 and you should see a transfer amount. Sorry, I'm not seeing it here. They're actually putting it into the internal service fund. So it will end up hitting the internal service fund. It's that transfer in, transfer out amount that you see on the general fund, and it ends up being hit into the internal service fund. So again, those are all the journal entries that you need, and that's really, really the meat of all of this. So if you can get your journal entries into the conversion worksheet properly, I'm going to pull up the worksheet. So here's your worksheet. And if you can get the journal entries all in here, and make sure to put your debits and credits, these totals have to balance, right? And then you do the same with the internal credits or the internal service funds to get those on here. In the end, you have to balance between total debits and total credits. And let me tell you what the total should be. So the total debits and the total credits. So total debit should be $88,289,770. So that would be in your file. That's what this number should be that I just said. And it should also be what this number says for the total debits, because total debits have to equal total credits. So once you have the conversion done, the rest is really putting the financials together based on all of the information that you've just put together. So when you're putting together the financial statements, you're going to have your statement of activity, and you're going to, it's unusual compared to how you would normally prepare a balance sheet. Go back to chapter, I think it's chapter 1. Let me see where I discussed it in a previous video. If you're not sure how to put this together, I did an overview. I just want to give you the right chapter reference, because you can go back to the chapter that I discussed it in when we're just, yes. So if you go back to chapter 2, and I talk about reading the government-wide financial statements on page 31, you can see how everything comes together. So you already have all the information. All you're doing now is compiling it. So you're taking the expenses and then any revenues that come from here to come up with the total activities. And then kind of oddly, you're putting the revenues down here to get the change in net position. You know, the beginning, so the change plus the beginning will equal the ending. In this column specific to governmental activities, which remember also include the internal service fund, and then the business type activities are also our proprietary funds, but only the business type activity. The internal service fund is now part of governmental activities per your conversion. So you do that, you total them up, and you will get the total change in net position. And that change in net position is what you need to get your balance sheet in the end to balance. So you're going to have to, do this change in net position or ending net position here. And then all of this information, your cash, your liabilities, everything's coming from this tab. It's already done, right? Your cash, all of your assets are already done. Your liabilities are already done. Just be careful. When I did this out myself, I actually got confused with the accumulated depreciation. Don't forget that accumulated depreciation is a contra asset on the asset side of the balance sheet. So when you have that accumulated depreciation, you have to make sure to offset it against the capital assets on your balance sheet. So you're putting that together. You already have all the information to compile this. And then the last piece are the reconciliations. In these reconciliation, all it's doing is taking the fund balance that you had in your governmental funds, right, that you just put together for your balance sheet. But this, not this balance sheet that you just put together. This is the balance sheet from the governmental funds that you did in chapter 5, right? That's the total fund balance. And then you're plugging in all of the conversion entries that you did in your conversion to come up with the new net position for government activities. So let me tell you what that number is so that can be kind of a check for you. That number should be 23,106,410 should be your net position for governmental activities. That will come right from here, right? That will be your net position that you end up calculating for the governmental activities. And then you're also going to reconcile the change in the fund balance. So this change in governmental fund activities, again, comes from your governmental fund change from chapter 5. And so that's based on modified accrual. And then these are all of the entries that you came up with that you're plugging in to show how you reconcile down to your new change in fund balance based on the accrual basis. And this change in net fund balance is going to come right from here, right? The total, and sorry, it's the total for just the governmental activities. And that number should be, let me give you that. That number should be a negative 1.8,580,000. I'm sorry, 101,858,340, and it's a negative. So that's the last piece. And once you've put all of that together, you have completed the continuous problem. You have completed the requirements for the governmental portion of this course. But this is certainly a big endeavor to, put it all together. But I, think I did a pretty detailed walkthrough of the journal entries, because that's really where everything is derived from. And the rest is really kind of a matter of bookkeeping, making sure that you can put everything into their proper spots. But follow along in the book, because the book definitely has a great example of, where to put everything if you're getting confused. So good luck, and hopefully you are able to come up with those ending numbers that I gave you, but just let me know otherwise. Thanks.